As the capital's come into the world economy en masse since 2008, proportionately quite a lot has come towards insurance, and it's created whole new ways of accessing insurance markets as a place to invest. And there's this concept that didn't really exist 10 years ago that now has become very popular and fashionable called catastrophe bonds. These are bonds that you can buy as an investor that will pay out if triggered by certain catastrophe events, and that could be very specific events like an earthquake in California or windstorms in Florida, or it could be a meteor striking. And there have been insurance companies that have sold cat bonds into the market to protect themselves against those real tail risks. There's about $600 billion of capital in reinsurance markets. I think the estimates are that there's about 100 billion that's now through cat bonds, which is a whole class that didn't exist just, as I said, about 10 years ago. The implication of that is that you end up with big events happening locally in local areas, and the biggest event we've had in our part of the world in recent memory were the series of earthquakes in New Zealand, in Christchurch. That was an $18 billion event for the industry. The claims are still being paid, but we're up to about $18 billion of spend so far. Price and the total premium in the entire New Zealand insurance market's around $3 billion. So it's about 5-6 times the total market's premium for 1 year gone on one series of events. Prices today for insurance in New Zealand are now less than what they were in 2011. So the market's completely forgotten about what proportionally is one of the biggest insurance market events ever for a market like New Zealand. Forgotten about it, and that's all foreign capital coming into the New Zealand market through reinsurance vehicles. As far as appetite in Australia goes, I'm not sure what appetite there has been from pension funds here to invest in these alternative assets. It has been pension funds in other parts of the world that have driven it. Other parts of the world where low-risk investments are now either at zero or very low interest rates, and perhaps if interest rates continue to decline here and risk-free income's harder to get, then perhaps more of those funds will find their way to our industry.